I was sitting in the BMW dealer waiting for them to put on the plates to a car I recently bought. And I was sitting here thinking to myself, I've been driving these cars for 20 years, but now with the high price of inflation, how can you get the car that you want in this kind of economy? With even non-imported cars going close to $100,000 and some even over $150,000. So in this video, I'm going to show you how to increase your credit fast so you can get approved, and some techniques so the dealership does not shotgun your credit that would totally destroy your credit score. So stick around for the whole video so you can check out this information. Now, if you're new to my channel is designed to help you no matter where you are in your credit journey. So if you like that kind of information, make sure you subscribe to this channel and give this video a thumbs up. Also hit your notification bell so you can be notified anytime I upload a new video. And if you're one of those people that a dealership shotgun your credit, I got some good news for you, because at my website, I give you a free hard inquiry removal package, and you can download it for free. I have other removal packages for purchase to remove your negative items off your credit. So if you want to check that out, I'll always leave the links in the description of the video and in the pinned comment section. So let's jump in to this information. Now, I'm going to give you 5 steps that you can take in order to get the car that you want and increase your credit score fast. Now, step number 1, you want to start working on your credit 30 days before you purchase the car at bare minimum. The reason is your credit scores update every 30 days. And if you have credit cards, different accounts like that, they update only once a month. So you want to take 30 days out to start working on your credit so you can increase your credit score. Now, if you're a person with less than 5 open credit accounts, you have a thin credit profile, and if you have bad payment history, you can help yourself by adding on trade lines to help you improve your credit score fast. Now, with these that I'm going to suggest to you, there are no hard inquiries that will be added on to your credit report. So the first one I suggest is Kovo. Now with Kovo, the way it works, it's an installment loan. Now with this, there is no credit check for this or no security deposit. And for as little as $10 a month, you can begin to build positive payment history. And with this, if you have a thin credit profile or a person that had some bad credit accounts, adding this account on can help your credit profile because it would show a positive account. Now with this, it is like you paying for courses, and the total amount is $240 that you are getting this loan for, but it's only $10 a month. The reason why this is great, it's a very low installment loan. So when you go to apply for any loan like a car loan, they look at your debt to income. With this installment loan, it's only $10 a month, so it will not affect that for you, but still give you a positive account, and you don't have a thin credit profile. I did a whole video on this, so I'll leave the link to their website in the video so you can check out how it works. Now, my next suggestions can help everyone, whether you are above a 700 credit score or below a 700 credit score. You can add trade lines like rent reporters like Boom, and with Boom, they report to all 3 of the major credit bureaus. The only thing with Boom, what happened, you have to had your rent to be paid out of one account, your checking account or bank account. So for them, but the good thing, they can report your rental payments for the prior 24 months, which is 2 years. My second option is Credit Rent Boost. Now they can report your past payments back to 2 years, but with this one, you didn't have to have the payments coming out of your checking account, because some people, they don't have that. Or if you're a young person living with your parent and you give them rent or something, you can rent a room and your parent can vouch for that. So with Credit Rent Boost, they just need someone to vouch that you actually pay rent, and they can report that to 2 of the credit bureaus for you, and that's TransUnion and Equifax. So those are options. I'll leave those links in the description of the video in the pinned comment section. And one that everyone can use is authorized user accounts. Now, with authorized users, you can just piggyback off of someone else's credit card history. You want to make sure, though, they don't have any missed payments or their utilization is not over 30%, because if that card is maxed out, it can kind of hurt you negatively. That's why I wanted to mention this last. But some people I talk to, they don't have any relatives or anybody who can add them on as an authorized user. And with authorized users, there's no hard inquiry or, credit check to be added on. So it will not affect your inquiries, just like all of these suggestions. So you can see a benefit of your credit score increasing. Now, my next suggestion, you guys, you need to pay down your credit cards down below 30%, at least 29% at bare minimum. Now, your best optimal to pay down your credit cards, for them to be from no more than 10%, from 1 to 10%. That's optimal. But bare minimum, you guys, down to 29%. Okay, now, if you guys got a card that's maxed out, you got to pay that card down, or you won't see a lot of movement, because utilization is 30% of your credit score. So it's the second biggest chunk. So make sure you pay those down to at least 29%. If you're like, hey, I need to get this down payment for this car, 50% or 49%, under like 50%, 49%, you're pushing it. But don't let one line, you guys, I have seen this. People have these small credit cards and have one credit line that's teeny weenie, that's tearing down their credit score because it's close to being maxed out, and the algorithm will ding you for points. So make sure you get those down, and you want to pay this right before the report date. Okay, the report date is when the credit bureaus report your balances to the credit bureaus, not your statement date, because it's a lot of people, that's if you don't want to accumulate interest. But many people will pay on that statement date and then start using that card again. If you use that card, they're going to report that balance to your credit report. You can kind of hide your utilization if you pay that card down and let it report and then start using the card. But you got to make sure it report before you start using it again. By doing this, you guys can see all together with these, you might see up to a 150 point increase, okay, in your credit score. And you can do it fast by employing these strategies and even just doing a few of these strategies. Now, the second step, you want to look for your loan. And what you want to do is use this method that I'm going to tell you. You want to find places first that's going to give you soft pull pre-approvals, like Capital One, Chase. Also, you can use PenFed. PenFed is good because it is a credit union and anybody can join, and they give auto loans all the way up to $150,000. Now, with PenFed, it's better if you can establish a relationship with that credit union at least 90 days out, set up your direct deposit and put some money there. It will be better, but you can pre-qualify with them also. The membership is only $5, and that's how I actually financed my car when I first got a BMW X5, and that was in my early 20s. Okay, you guys. So with that, they financed me. But some of you guys have Navy Federal or other credit unions. Look, Navy Fed have a pre-qual, but it's a hard pull. So you don't want to, go with them first. Get your other soft pulls. And if you're a person that's, thinking, I'm going to go with Navy Federal, get those soft pulls first to see how much they're qualifying you for. Then go with Navy Fed because it's going to be a hard pull. Okay. Another thing with Navy Federal, and it's just a fact of life. If you're self-employed, you guys, especially if you got an LLC, you may want to be an employee of that LLC. When people say I'm self-employed, but if you're LLC, you're working for that LLC, because a lot of banks don't like self-employment. You will get a lower credit extended to you. Okay. And if your credit scores is high enough, you won't be asked for documentation. My credit score, I wasn't asked for any proof of income. If that's why it's important to work on your credit first. And you want to do that, boost your credit scores, give this 30 days, and then do your soft pull pre-qualifications, you guys, because then you can get more if your credit scores is higher, and you may not be even asked for proof of documentation. Okay, so you want to do that first. Also, I'm going to give you a little, nugget here, you guys, on what you can afford. In my 20s, when I was 25, like I said, got the X5, and I, could afford it, got approved, but insurance, I didn't think about the insurance, and my insurance was the same amount of my car payment. It was like $500 a month, and it was kicking my behind. Okay, so what you guys need to do before you make your choice, take, if you see a car, take that VIN number, or let your dealer, your insurance company, let them know what car you're going to buy. You can get a VIN number offline by looking at these cars and give it to call in or give it to your agent if you sit down with somebody, and they can tell you what your insurance is going to be. Okay, you need to do that, especially if you're younger, or if you just have a budget. Make sure, because that can play into your choice. I had to refinance one of my rental properties and pay the car off within 2 months. I had to, because the insurance was kicking my butt along with the car payment. So that's just a piece of advice. So then you'll know how much you can afford once you know what your what you're approved for, and then what your insurance is. Now, the third step, now that you have your pre-approvals and pretty much have worked out where you're going to get your financing from, is to figure out your down payment. How much down payment can you afford? Now that you have your price of what the banks are going to lend you, and you know what you're looking at, or maybe an idea of a vehicle you're looking at, then you might know how much of a down payment you're going to need to achieve what you want to get. So your down payment is going to be very important. You want to make sure that if you're going to get a vehicle, pretty much You don't want to be paying more for your vehicle than 10% of your monthly income, you guys. Okay, so that should tell you how much of a car you should be able to afford. Then that should dictate what your down payment. I mean, really, to be technical, you want to kind of put down 20% because if you're getting a new car, you want to equate for depreciation that always happen with a newer car. And even with 20%, if you have to get out of that car in a couple of years, at least the car won't be that far underwater. And so you want to make sure you have a feasible down payment. So you want to figure that part out. Now, step 4, you can look for your car. Now, you want to expand your search. Now that you know how much you can afford, how much down payment, that's going to kind of narrow down your car selection. Okay. So with you looking for a car and you know what banks are kind of giving you the feelers of what you're being approved for, this is going to help you decide. Now, looking at these cars, understand a newer car, especially if you're dealing with a car, like Mercedes, BMW, these new cars are not, you're not going to really finance these cars. It doesn't make sense. You're going to go with the lease because if you're looking at a car that is $100,000, okay, $100,000, and for you to finance, they kind of want you to put 20% down. That's 20,000, and you're still probably financing 80 grand, and that is a huge choice. You're gonna be over $1,000 a month alone in a car payment. So you might be at like 1,200. Okay, so this is why getting your credit up so you can get a better interest rate, but interest rates are high. So you're gonna lease these cars if you are going for that new car, and means you're gonna have to trade it in every 3 years, which isn't bad if you're going for, especially let's use this example for a BMW, because these cars are very expensive to maintain, and it's the parts. Okay, the parts are really expensive. So with these cars, there's a sweet spot, and because it's a lot to maintain, they newly will depreciate in that 3-year period. That's where a large part of that depreciation is going to happen. So then your second option, if you want to really finance, maybe is to look at the certified pre-owned vehicles. That's a good way to go because people had to have them serviced. And if you are looking for a car like a BMW or, Mercedes, these cars do not change body styles a lot because it's expensive. I used to work for Ford, a manufacturer, for about 7 years. UAW, what's up? Union rep right here, I was. So if you understand manufacturing, we always would retool when it comes to July. That's where most cars, because the new car models are going to come out around September, October. So with that, you guys, if you're looking for those certified pre-owned vehicles, you want to know what date that car came off the line, because number one, that's going to deal with your factory warranty. So you want to see, and if that warranty still stands, and with your certified pre-owned, you want to look at the mileage, especially on these cars. You probably don't want no more than 36,000 miles on these cars, because like I said, these cars are, expensive to maintain, but getting it certified pre-owned, these people had to come and have the oil changes done, the services done. So, and they couldn't put a ton of mileage on these cars or they would pay through the nose. So you're going to pretty much have a maintained vehicle. But looking at when it comes off the line, especially if you're trying to look at these models, like I said, a lot of these cars, this is the gems I'm giving y'all. They're gonna run these cars if you're looking for a certain model for a period of time. Find out when they did that body change, okay? So when did they change up this car? Because most of the times with these cars, because it's expensive, they only change the lights, tail lights, or some of the interior technology. So you can get that same look of a person of a new car, and your car could be like 5 years old, okay? But here's the key. You want to kind of stay in that certified 3 to 5 years old and play with that mileage. So if you're a person that wants a certain car, that's that key to get the car that you want. You want to do your research here. Also look at the models to see if they have problems. What years have problems? What kind of problems they are? Because if you look and research, it could be some years you want to stay away from, so you know to skip over that body style. Also, another thing, when you're dealing with these cars, if you getting that certified pre-owned, going back, like I said, with that warranty and with when that car came off the line, can you get that warranty? Because if a car is older, and you want to purchase a warranty, for the maintenance, it depends on the date that car was built. So you might be looking at, let's say, a 2024, and let's say it's 3 years from now. But that 2024 came off the line in August, and actually right now they're making the 2024s in 2023. You might not can get that extended warranty later down the line because it rolled off the line early. Also, I working for a ex car company. No, any first model years I stay away from. The reason why, first model years, you always have some bugs or kinks that, because they switched up the body style, the tooling, also working on the line, having that experience, that job that you used to have, now they're adding new parts. People can make errors. A lot of time it could be just engineering errors because they don't have, this is the first model year, so they don't know everything that can go wrong. Usually by the second or third, they worked out those kinks. So I tend to stay away from that first model year that they make a car. So if you're looking for the car you want using this strategy, you can get the car that you want, even if you're a person that can't afford that new price sticker. Now, the last step, you want to take your pre-approval letters or your secured loan that you already have with your credit union with you to the dealer. So they should not be tearing down your credit score because you already secured your financing. So this should prevent them from shotgunning your credit score, because all you're there to do is get a car. Okay, I already did my due diligence, and so you guys don't have to tear my credit score down. Also, make sure once you do your search and go to a dealer, I go to a couple of dealers, I expand my searches, because if you want a particular car, you're looking for what you want and you want a good price to fit into your budget, you might not can just go to your local dealer. You might have to be willing to drive. Okay, you might have to do searches. Especially for me, I was in Northeast, lived in Jersey for years, and anybody that lives in that area know with Philly and New York City, especially New York City, has a ton of cars that comes off the lease. So you have a plethora of cars, foreign cars, whatever to work with. But now being in Texas, I had to go and drive further to find a car that I wanted, to check out the vehicle, type that I wanted for the price that I wanted. And sometimes you guys, you might have to look for a minute. It took me like, I've been looking for a car, what I wanted for 3 or 4 months, because I can afford it, but I'm not going to pay extra. I'm just not going to do that. And, so you want to now with this high, interest rates and with this high inflation, you want to play the game right. Okay. So once you go to that dealer, you have your secured loan. Then once you buy that car, you want to review your paperwork, take pictures. If they bring you documents or bring you those papers and say, hey, here we got, take a picture let me take it back to, my manager, take a picture of that and let them take it back. Also, don't fall for the trick when they say, how much do you want to pay a month? How much is it going to cost me? Not the payment. What is the cost? Because a person, you might can buy a car that's only worth, $10,000. And when they say, well, what do you want to pay? Well, I want to pay $200 a month. They might stretch out those payments and add high interest. And by the time that you finish paying for that car, you might have paid like $30,000 or $35,000 for a $10,000 car. So it's not about how much my payments is. Look at the total cost once you get finished paying for that vehicle. So you want to consider that. Also, if they're making you promises about, we're going to fix this. We're going on the what is called the document, the WIO. Make sure you guys, when you leave there, you sign that WIO. They sign that WIO. When they give you that packet to walk away, check that, because you don't want that dealership to take that paperwork out or you're screwed. You're not going to be able to get those things that they said. So you don't want them to play any games. Check all your documentation before you sign in it. Ask questions and really do your due diligence. So I hope this is helpful for you guys. I hope I gave you some tips and gems so you can get into the car that you want. And I hope to see you guys in the next video. Stay tuned.